Okay, so welcome to the session 3 of XMC Mastery series. In this session, we are diving deep into one of the most important concepts in trading, which is absolutely bias. If your bias is wrong, your trades will struggle, even if your entry is perfect. But when your bias is correct, the market becomes predictable and profitable. So let's break it down step by step and learn how to read the market like a sniper. So let's get started. So, how can we find our bias and place the right trades in the right direction? Now, if your bias is wrong and you get a trade in that direction, then chances are that it will be your stop loss. So it is very important that your bias is right. If your bias is right, then normally you will get good trades in the right direction and chances are that your day will be profitable. So we will divide bias into two sections. In the first section, which is today's session, we will talk about intraday bias, how we can find our intraday bias. And in the second section, which is about weekly bias, we will add some more advanced concepts. Okay. In the third session, which is also part of today's session, we will focus on aligning intraday bias. We will talk more about that shortly. Okay, so the first topic is intraday bias. How can we find it? So the first rule is we will use the 1 hour time frame. Okay, so the rule is that we will use the 1 hour time frame. We will be adding more elements to this now, which will be covered in the upcoming session. How does the 1 hour time frame help us to find the intraday bias? So the answer is very simple. The direction in which the 1 hour structure is breaking will determine our bias. If the structure is breaking to the upside, our bias will be bullish. If the structure is breaking to the downside, our bias will be bearish. Now, when the Asian session ends, we typically have a good idea of which direction the market is heading. For example, let's look at today's chart. Here, this was our Asian session, and from here to here, based on that, we had an idea that the market was breaking structure in a bullish direction. So our bias for today was bullish. As it turned out, the market remained bullish throughout the day. So looking back during the first Asian session, we saw a structural break which indicated a high likelihood of a buy. So our bias for the day was also bullish. Later on, we got another structural break in the next session which shifted our focus to sell trades, giving us a bearish bias and targeting the next point of liquidity. And if you look back, we can identify trades in the direction of the structural break. Now, to see more intraday bias, we go to FX replay. Here, we create a new session for bias and select the XAUSD pair. This for the month of May 2025, but we will go 1 year back and backtest for a month to see how we can find our bias. So simply we create a session and look at the data from a year ago. Of course, no trader remembers what exactly happened a year ago on the same day and month, but we can still identify our bias for any month, any year through our system. And what is system now? Simply, in which direction is 1 hour going? You got that? The system is in which direction is 1 hour going, so that we can find our bias. Like if the market is breaking the highs, our bias is bullish. If it's breaking the lows, our bias is bearish. So if the market is breaking highs, we will only consider looking for buy trades. Right now, we have FX replay open and we are going to use our system to identify the bias. This is the 1 hour time frame. As you can see here, the market just broke this high. Breaking this high means this high. Market just broke this high. As you can see, the market just broke this high. Breaking this high means our current bias is bullish. Before that, if we observe closely, the market swept liquidity, broke the high and formed a strong low. So typically, price should aim for the next high. Now, I will add one more important point. Let's say we have some structural breaks like this. If any of those structural breaks remain unmitigated, meaning the market has not returned to react to them, then our bias can shift. It may turn from bullish to bearish. These unmitigated structures and points of interest can still give us a reaction later, and yes, we might get trades from them, but overall in this scenario our primary bias remain bearish. Alright, it's around midnight now in the charts. Let's move forward. We are currently waiting for the end of the Asian session. As you can see, our bias was bullish and we got a good reaction from this area. Of course, you could wait, though it's not ideal to stay up until 1 a.m. But yes, that level was respected. Now the Asian session has almost ended. We didn't get a clear structural break during this session. So for now, we will continue with the same bullish bias. Okay, we do see a low break here, but that doesn't necessarily mean that market will completely reverse to the downside. In fact, we have a structure forming with a strong low, a liquidity sweep and a high break. This means the point of interest, the POIs around that area still have a good chance of playing out. Even with this low break, the POIs in this zone are still valid, and for now the market looks likely to continue projecting upward from here. Okay, so from here the market moved exactly as expected. It went up, but of course we don't take random trades. We wait for sniper entries from a specific point of interest, ideally with no drawdown or 1-2 pip drawdown. So today's trading day is gone, but in the charts, but the direction in which the market is moving and the direction in which the structure is breaking is clearly bullish. That means once again our bias remains bullish. Now the previous structure that was broken has a point of interest within this range. We will likely see a reaction from there, but even with that, our main bias for now continues to be bullish. Well, I'm not going to tell you exactly where you will get the reaction from, not yet. I could easily point it out here, but that's something we will study in the upcoming session. We can't open all the pages at once. Alright, so right now the Asian session is running and the London has just opened. What happened during the London session, the market dropped, swept some liquidity, specifically in the Asian lows, and now there's a strong chance the market will give us a move back toward these highs. Of course, we will likely get a reaction from this area, but not necessarily a full follow through. And in this case, we got a beautiful reaction right from here. The structure broke, price moved from our point of interest, and even the next point of interest, just like I mentioned earlier, gave a solo reaction. It could have been news, which is why we saw such strong momentum in the market. Alright, let's move on to the next day. What's happening here? During the Asian session, the market clearly broke structure in the bullish direction. The structure was breaking in the bullish direction, so our bias for the day is going to be bullish. As you can see, the market continued breaking structure in the same bullish direction, and structure itself was being respected. Of course, we can't say exactly where the reaction will come from, whether it's this level or that level. Those details will be covered in the upcoming session. Now let's move on to the next trading day. Again, let's move to the next trading day. In the Asian session, we had a low break which indicates a possible reaction and drop. There was also a structure break here, so the point of interest in that area is likely to give a reaction. Another unmitigated point of interest exists here as well, which we expect to react to. Well. After the structure break, the market dropped and then we had a new structure break. Now the market has reached the area of a previous break, and as expected, we got a solid reaction from it. But despite these reactions, our main bias still remains bearish, since the structure breaks are continuing to the downside. Just by looking at the market, we can tell that market has dropped from the next point of interest. In this case, there's a potential for both a buy and a sell from this area, but how to decide between the two, we will explore that in the upcoming sessions. Okay, so now let's see what happened in the Asian session. In the Asian session, we had this this high break. Before that, this high and this low, we have a swing point. So chances are that from these areas, we will get a good reaction. Okay, exactly the same thing happened. We were looking at these areas and the expectation was that we will get a drop from here, so we got a drop. These areas remain unmitigated, so the market is expected to react from them as well. And indeed, we saw a reaction. The market moved roughly 120 to 130 pips here. The market has returned to our point of interest and we observed another reaction of around 120 pips. That's enough. We have seen the reaction and now the market is moving upward. Again, we can only follow today's bias, which has delivered a strong move from these unmitigated areas. Okay, now let's move to the next day and see what the market does next. So right now nothing much is happening. The structure is not breaking. Let's wait. So recently market has broken this internal structure. So chances are that market will pull back from here and go up from here. Okay, so the market didn't pull back from that point, but instead pushed up and then drop again. Whatever the point of interest is here, the market is now mitigating them, and this looks like a clean move. Or sniper entry will be right here, almost a 250 pips move, a precise and a pinpoint entry. I can see the entry, but maybe you can't because you have not been taught that part yet. And as you know, we are not revealing all the cards just yet. That's coming in the upcoming sessions. Don't worry about that. Okay, so our bias is still bullish. The market pulled back during the New York session after breaking a high, which is a logical move. Then the market continued in its trend direction, moving up by nearly 200 pips. Now let's wait for the next day. On the following day, again we had a high break during the Asian session. Bias remained bullish, and during the London session the market continued moving up. But now we are seeing a low break, an internal low break, during the London session, so the chances are the market will react from this area and start to drop. After being dropped, of course the market gonna react from these unmitigated areas. And yes, market did react from the internal point of interest above. And now after the reaction, market gave more nice move from this point of interest as well, which is almost 150 pips. So let's go ahead. Alright, the next structure break we had here, the low break, we got a reaction from here. Now the Asian session has started. After that, let's see what the market does. We can get more reaction from here. Let's see. Okay, now still our main bias is bearish, and from here we can get the move of the sell. Okay, the market didn't go that far, but the chances of that it can drop from here as well. Of course, there was an entry, but we will discuss about exact reasons and entry logic later. Now, if you notice, there was a structure break here and the net B points of interest were left unmitigated. That gives us the chance to catch a bullish reaction from here, possibly as part of a pullback. Okay, so we got a small reaction from that zone and now the Asian session has begun. Again, during the Asian session, we observed a break of an internal low indicating a possible further drop. But that drop didn't play out. Why? Because the market formed a new structure break, and after that break, price came back to mitigate the previous zone. Once that mitigation happened, the market moved up cleanly. So yeah, this kind of structure jumping behavior tells us how quickly things can shift depending on how the market reacts to key level. We had a very good entry here as well in the unmitigated zone, but we will talk about that later. Alright, so now let's move to the next stage and see what's happening. Okay, so in the Asian session once again we are seeing the same pattern repeating. Another high break, so naturally our bias remains bullish. Now take a look at this candle. Just one tap and the market shot up. This single one hot candle moved nearly 200 pips, and with the way price is pushing, it's clear the market intends to keep going higher. So most likely the market will fly more from here. From here we had a clean break, a pullback. The point of interest got tapped and the market continued its bullish run. The last time we studied imbalance and balanced market. So now if you look at this, it was a clean imbalance market where the market is leaving the clean imbalance. In this case, there was also a clean imbalance market. The market was leaving the unmitigated imbalance, which is later mitigated. After that, there was also an imbalance market. This was a balanced market because there was no imbalance in this drop, but of course we know how to trade a balance or imbalanced market. Even if you look at the previous market, this was also an imbalanced market. This was a balanced market where we know how to trade. Okay, so now let's move forward and skip to the end, and I can leave some work for you so that you can test out things yourself and observe things and train your eyes so that you can see and catch trades like me. Okay, so right now we have got a high break, and yes, it's from a wick, but remember, whether it's a wick or a candle body, it doesn't matter. A high break is a high break. So at this point we might expect a fade to the buy side. Now, here's where things get a bit tricky. There's some complex price action. One break occurred here, and we are seeing a reaction from that point of interest. But there's also another break slightly below, and that POI could also react. So, which one controls the market? Well, both did. We first got a sell reaction, then that left side POI got hit, and we witnessed a clean bullish momentum move almost 200 pips. And that was a sniper level trade, a pinpoint entry. I saw the entry, maybe you didn't, because, and that's okay, because it's all be revealed in the upcoming sessions, and your eyes need to be trained according to that to see that upcoming opportunities. Okay, so we have seen multiple structured breaks. We have seen the data for a month, and that how we can find our bias from the breaks in the Asian session. Sometimes the confirmation comes in London, other times in New York, but the session doesn't matter as much as understanding the breaks themselves. And in the upcoming session, you will gain an even clearer picture of how to find your daily intraday bias with precision. Okay, once you master that skill, once your eyes get trained to see the structure, you will hit a new level. You won't just be analyzing the charts, you will be operating like a money making machine because you have not yet seen or studied what's coming next. So, honestly, there's no mentor in the industry who's teaching this the way I am. Because maybe someone out there knows it, but they are not making it accessible the way you are experiencing it here. So, whatever you are about to learn in the upcoming sessions, either only I know it or after me, you will. And if there's anyone else in the industry who holds this knowledge, trust me, they are not teaching it. Maybe someone out there is doing it, but even if they are not doing it like me, for sure.